September 16th, 1992. One man, one trade, $1 billion profit, all in 24 hours. While an entire government scrambled to save their currency, George Soros was quietly positioning himself to profit from their inevitable failure. And by 7:30 p.m. that day, he had literally broken the Bank of England. But here's the real story that often gets overlooked. This wasn't just luck. This was meticulously crafted strategy that you can learn from. Now, in the next 10 minutes, I'm gonna dissect exactly how he pulled it off, the psychology driving his decisions, and the 3 essential lessons we can apply to our own investing today. So let's dive in. All right, so picture this. It's 1992 and the UK is trapped in what's called the European exchange rate mechanism. Think of it like financial handcuffs. They had to keep the British pound within a tight range against the German mark. No flexibility, no escape between these two currencies. But George Soros, this Hungarian immigrant who survived Nazi occupation and built one of the most successful hedge funds in history, is looking at the situation and thinking, this is unsustainable. And he was right. The UK had high inflation, weak growth, and they were paying crazy interest rates just to maintain this artificial system. It was like trying to hold a beach ball underwater. You can do it for a while, but eventually your arms get tired and the thing comes rocketing up. So what did Soros and the team do? They built a massive short position. We're talking billions of pounds. Let's break this down because this is crucial. Shorting is essentially betting that something will go down in value. Here's the process. Soros borrows billions of pounds from various sources, sells them immediately on the market with the plan and promise to pay these back or buy them back later at a lower price. Because he has this obligation to pay these back, when he buys back at a lower price, this locks in a profit when it goes down. It's like if you could borrow your neighbor's Tesla car and sell it right away for $100,000. Now, you gotta pay back one Tesla car in the near future. So you wait for the car prices to drop down to $60,000. And you buy back a used Tesla for $60,000 and give it back to your neighbor. You would then pocket the $40,000 difference. They got made whole they got a car back, the same Tesla car, but you made the difference from selling here and then buying back into the lower price. But here's what makes this so brilliant. Soros wasn't just betting against the pound. He was betting against the entire British government's ability to maintain an unsustainable system. Now, let's talk about the psychology here because this is where it gets really interesting. A lot of people short stocks and stuff, but this time it was different. Most people think Soros was some kind of financial terrorist attacking the British economy, but that's not what happened at all. Soros understood something that the entire British government missed. You cannot fight market forces forever. When something is overvalued and unsustainable, the market will eventually correct it. And if you position yourself correctly, you can profit massively from that correction. Think about it like this. Imagine you're at a poker table and everyone's bluffing with shaky hands. You're the only one who can see the sweat, the tells, the overconfidence. Now, you can sit back and just play like them, or you can wait for the perfect moment, go all in, and clean the table when the illusion collapses. That's exactly what Soros did. He saw the cracks in the system that others ignored. The UK was spending billions trying to prop up an artificial exchange rate. Their interest rates were unsustainable. Their economy couldn't support the pound at that level. It was a house of cards waiting to fall. But here's the genius part, and this is crucial. Soros didn't just make this bet and hope for the best. He understood that his actions would actually help trigger the very collapse he was betting on. This is what we call reflexivity. His theory that markets aren't just passive reflectors of reality, they actually help create reality. By shorting massive amounts of pounds, Soros was creating selling pressure from other players in the market. And when other investors saw the selling pressure, they started to panic and sell too. It became a self-fulfilling prophecy. The more he sold, the more others sold. The more pressure built on the British government to defend their currency. And here's where it gets really interesting. Soros knew that the British government had limited ammunition. They could raise interest rates, they could spend their reserves buying pounds, but eventually they would run out of options. It was like a game of poker where Soros could see everyone else's cards. It's September 16th, 1992, Black Wednesday. This is where everything comes to head. The UK government is in full panic mode. They're watching their currency get absolutely hammered, and they're trying everything they can to stop it. First, they raise interest rates immediately from 10 to 12%. Think about that. Overnight, borrowing money in the UK just became 20% more expensive. That's like getting hit with a surprise $400 a month rent hike, except you can't move out. But Soros, and we should mention Druckenmiller and Scott Bessent and their quantum fund together, they just kept shorting harder. They stayed in the trade and they said, oh yeah, you want to play? Let's play. So what does the government do? They raise rates again from 12 to 15% in a single day. This is absolutely unprecedented. This is desperation. They're essentially saying we will destroy our own economy to defend this exchange rate. Meanwhile, the UK government is spending billions, and I mean billions of their foreign currency reserves trying to buy pounds and prop up the price. It's like trying to keep a sinking ship afloat by bailing out water with a bucket while someone else is drilling bigger holes in the hole. But here's what makes this so legendary. Soros, Druckenmiller, and Bessent understood the government's psychology better than they understood it themselves. He knew they were bluffing. He knew they couldn't sustain 15% interest rates. He knew they couldn't spend their entire treasury defending an artificial exchange rate. So he called their bluff hard. The quantum fund kept shorting, and other hedge funds started following suit. International investors started panicking and selling pounds. The selling pressure became absolutely massive. We're talking about billions and billions of pounds being dumped on the market simultaneously. And then boom, the dam broke free. 7:30 p.m. on September 16th, the UK government threw in the towel. They announced they're withdrawing from the ERM completely. Now, the ERM is the European Exchange Rate Mechanism. This was a precursor to the Euro system that we have now. They said, we're going to withdraw from this completely. They're essentially saying, we give up, the market wins. Now, the pound didn't just fall, it went off a cliff. We're talking about a 15% drop in a single day. To put that in perspective, that's like Apple stock losing $500 billion in market cap overnight. It would be absolute chaos. But this wasn't a private company. This is a full currency of a nation state. So what happens next? Well, Soros, Druckenmiller, and Bessent made over $1 billion in a single day for their fund. One day. That's more money than most people will see in multiple lifetimes. Made all in 24 hours. And that's how Soros earned the nickname, the man who broke the Bank of England. And this is why even today, George Soros has the reputation or is the boogeyman behind a lot of conspiracy theories. Now, I don't know if those theories are true or not, but a lot of people point to, oh, it's Soros funding all of these evil things going on Earth because he built a reputation of as a guy who, in this example, took England to the brink and allegedly did that to a number of other nation states prior. So a lot of people today say, well, could he be doing it again? But here is the real lesson, and this is important. Soros didn't break the system because it was some evil genius or financial terrorist, at least in this scenario here. He broke it because the system was already broken. The UK was trying to maintain an artificial currency level that their economy could not support. Soros just had the intelligence, the resources, and the courage to bet against it. As Soros himself said in interviews afterwards, and I'm paraphrasing here, but he said he couldn't have done this alone. He wasn't fighting the market, he was following it. The market wanted the pound to fall, and he just positioned himself to profit when it inevitably happened. That's the difference between gambling and strategic investing. Gambling is hoping you get lucky. Strategic investing is identifying unsustainable situations, doing your homework, understand the psychology of all the players involved, and then taking the calculated risk based on that analysis. So what can we learn from this? Number one, don't fight market forces. Understand them and position yourself accordingly. When you see artificial constraints that can't be maintained forever, that's where opportunities hide. Number two, unsustainable situations create massive opportunities. Whether it's individual stocks, entire markets, or economic policies, when something can't continue forever, it won't. Position yourself accordingly. Number three, psychology matters just as much as analysis. Soros didn't just crunch numbers. He understood human nature, government limitations, and market psychology. He knew the British government would eventually capitulate because it was unsustainable. And finally, Sometimes the biggest opportunities come from betting against conventional wisdom, when the conventional wisdom is based on unsustainable foundations. Soros saw an unsustainable situation, analyzed it correctly, and positioned himself perfectly, and made financial history. But more than that, he actually helped the UK economy in the long run. By forcing them out of the ERM, the European exchange rate, he allowed their currency to find its natural level, and ultimately set the groundwork for what we have as the euro today. And if you liked this style of video, comment down below other stories that we can dig into and make other video content like this for you on our channel. So with that, we'll see you in the next one. Bye-bye.